Gold prices declined early in the session, but rallied back and closed near unchanged, hovering at around 1816, trading today in a range down as low as 1805, as high as 1822. So ending near the top part of that range, but spending much of the session lower. Actually, this week we've seen settlements between 814 and 816. So despite the fact we've seen some wider ranges, settlement prices have been very much on top of each other as we continue to trade sideways here, waiting for that next catalyst event. The dollar today was stronger. That had very little effect on gold prices. While treasury yields were lower, that also had very little effect on gold prices, as again, we settled near unchanged on the day. Now, what does this mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you will notice that volatility has been nudging lower. It did that today as we continue to kind of trade at the end of the day in this tight range. We have seen some lower lows and higher highs, but ultimately ending the day near this 816 level. We did that again today, volatility nudging lower as we did. Lastly, let's talk about what the Fed is going to do, or what the market thinks the Fed is going to do, and how it might affect gold. Well, right now we are seeing expectations for the Fed to raise rates as high as 2 3/4 to 3%. Currently at 0.75% to 1%. That's a big move. Gold prices historically will be trading lower if rates are going higher, but there is this concern that higher inflation will weaken growth to such levels that maybe the Fed won't be able to extend their rate hikes as far as they want. Yesterday, we heard from Mr. Powell. He said he would do whatever is necessary to bring inflation down and get it more neutral back to their 2%. It'll be interesting to see what happens if those growth numbers don't comply. Gold right now holding at 1816 suggests that it's waiting for more information. So gold prices, after declining early, end up settling the day near unchanged, which they've done for the first 3 days this week. Later on, we get more numbers, more data, but ultimately the market's going to be looking into next week when we get those FOMC minutes from the May meeting.